Stavros Tousios for M4Markets. Today we're going to look at pound and oil. With the pound first, we have seen a rejection at the bottom of this channel, which suggests that there might be further upsides coming. Now, this also looks like an actual wedge. So if this correction has indeed finished, then this move to the upside, we're not just going to be aiming at 124.46, but much higher. Of course, provided or assuming that this is an actual wedge, because wedges at this stage of the trend, they are typically of the leading variation rather than of the ending variation, since we're not near an actual end either. So with that in mind, the idea is to go down on the 1 hour, okay, and actually pull our Fibonacci from the low to the high, that's the latest one, and track price action in the short term, see whether we can maintain the bias to the upside by staying above 122.56. Now, there is this case of a potential correction to the downside and then, the continuation to the upside. That would be something like this. Probably it will come off down in 5 waves from where we currently stopped, and we're going to be looking in this case. So if that happened, I'm saying that we could start looking at the larger Fibonacci retracement, taking into account a correction of this whole move of the wedge, right? And be looking for 38, 50 and 61.8 as well. Of course, we are still above the 23%, which is at 122.18, so very near the previous stop as well. But if what I'm saying is we fail to cross above the previous low, the chances of going actually lower in the medium term are going to increase. So we have to pay attention to the short-term price action to see what's going to happen in the medium term. Now look at this. When we look at oil, we have managed not to just cross above 70. We had a very good move yesterday, more than 5% in WTI prices. And the important thing here that we need to pay attention to is the fact that we have crossed back above this base channel. That doesn't necessarily mean we are bullish, but what it means is that we were in kind of an accelerated trend to the downside since like the 14th of March, okay? And now we're back above within this trend. The trend is still to the downside, but the fact that we are back within it means that we could see a leg up to 80 and perhaps even higher. Now, we do get some sort of divergence here on the 4 hour, which gave us that signal, and we are very near to turning over bought once again. However, we have not yet gone above the previous peak of the RSI over here, which means we could see another leg to the upside today, okay? And after that, maybe we are going to see some sort of correction. So what could happen is something like this. And then when we get here, either we go up or we continue lower down. Now, typically, okay, the way that we are falling, of course, let's not forget, markets move in 5s. If we fall down in a 5, then most probably will mean that this is not going to go any higher. But for now, because we don't have that divergence, what we are hoping to see is something like this, okay? So we will be looking for something like that, and when we get around 77 or so, maybe look for a leg to the downside, correction or reversal. But we need to pull the Fibonacci again from the top. Look, we're at the 50. So 74.80 or so might be the short-term, a short-term level that some sort of restrictions might appear. Okay, so that would be either from some profit taking or some like short selling. So either way, I think 74, 75, it's an important level that we keep in mind for the day, perhaps even tomorrow.